Hello traders, good day to you all. This is Christopher Glenn plus PlusFinancials.com, and this is a daily market review for the current market status. For the last several days, we had several announcements that definitely moved the market to different directions, and I'd like to talk about the correlation. Today, I'm going to talk about the correlation between what actually happened in the market and my assumption during this and last week regarding different assets, my expectations from this market's condition, and I will go over the variety of approximately three charts that will discuss the issue of what I actually predicted and what actually happened in the market. And I'd like to see exactly what is the progress and what is the current expectation from the continuance of the movement that we already saw on the charts. First of all, yesterday we had an announcement from Yellen. She talked about a variety of issues regarding economy and gave some weakness on behalf of the dollar. We saw the dollar losing strength in the market in front of the euro and in front of the pound, and we can see that the dollar is losing strength in front of a variety of assets. I will talk about the condition of the dollar in front of the Russian ruble and the potential of that specific movement, where I'm expecting it to drop down and what's the potential. My prediction was approximately 5% of drop down. We're already moving toward that direction, and we will see the potential on the charts when we'll analyze the charts. Last night we had an announcement from the Bank of Japan. If I'm not mistaken, the announcement itself gave some strength to the Japanese yen, weakness to the Japanese economy, and we will see that on the chart as well. We'll test the dollar versus Japanese yen. Again, I expect the chart of the dollar Japanese yen to drop down as well, and I'll analyze that as well. Right now, we're expecting to see an announcement regarding the Canadian dollar. I'm expecting the Canadian dollar to gain some strength in the market. Later on, we've got an announcement regarding the US dollar, unemployment claims, and again, the manufacturing index that we're expecting to see on behalf of the US market. This Friday, we've got a holiday. If I'm not mistaken, it's Easter. Um, Good Friday on Switzerland, and Good Friday on behalf of the pound, and so on and so on. So we can see that generally the market will be in a vacation, and therefore we're expecting to see very low liquidity, if at all. I don't think that we can actually conduct any kind of trading, but generally the market will reflect a very low amount of liquidity. Again, you can see that some banks aren't closed around the world, but still low liquidity is expected generally in the markets. Let's go to the chart and let's see what is our expectation. So I've been talking about a stronger currencies in front of the weaker Australian dollar for the last several weeks. I gave two examples, the euro versus the Australian dollar and the pound versus the Australian dollar. Let me show you what I mean exactly. When we're going to a weekly chart of the pound versus the Australian dollar, we can see that very nicely the market climbed higher, gave us an impulse movement, and lately it's dropped down for an A, B, and C pattern. Right now we can see this beginning of an uptrend and potential of a nice uptrend of 10% over here. It's just the beginning. Again, this is the weekly chart. Let's go to the daily chart. On the daily chart, we can see for the last 3 days, we had a nice uptrend movement. We do need to cross that area, this gap. 1.81 will be a good rate to buy the asset at, and then we'll be able to begin to continue higher. And if we'll go to the euro versus the Australian dollar, we can basically witness the same structure as the pound versus the Australian dollar. Again, a very nice and clean impulse movement climbing higher, and we've got an A, B, and C pattern dropping down. Right now, a weekly chart is showing the beginning of the uptrend potential. As well, we've talked about the dollar versus the Russian ruble, and I've analyzed that asset for 4-hour charts. I gave you this structure. We've got a 1, a 2, a 3, a 4, and a 5. 5 wave dropping down, and we've got an A, B, and C pattern climbing up. A good potential of an A, B, and a C pattern. Since I mentioned this potential, we saw that indeed the Russian ruble gained strength in front of the US dollar. not because of the Russian ruble itself, but because of the losing strength on behalf of the dollar itself. Right now, I do expect this area to bounce a bit higher, lower, and then I'm expecting it to collapse down. And that collapse will be on behalf of the Russian ruble gaining strength in the market. That is my expectation because of what we can see on going on in front of the Ukraine. That will be definitely a good potential to join that movement. Now, why do I say that that's a good potential? Because the amount of risk that we've got over here in front of the potential of the profit is enormous. I do expect this market to collapse approximately 5% toward the 34 rate, meaning 1.5. That's approximately 5% of a drop down, and that's a good potential for a very long 500 pip drop down. When I'm talking about the euro versus the Australian dollar or the pound versus the Australian dollar, potential over here is enormous. Approximately 10% of an uptrend movement, that's 1,000 pips. The dollar versus the Russian ruble will complete its structure at approximately 34 area, and then we'll begin to climb back up again. But that's a good potential for a downtrend movement, expressing the difficulty on behalf of the crisis that we've got already going between Russia and the Ukraine. Again, I said that I will analyze the dollar versus Japanese yen just to give you another prediction regarding that specific asset. I'd like to remind you that the dollar versus Japanese yen is the mothership of all Japanese yen currencies. If I do see some weakness on behalf of the Japanese yen in front of the US dollar, the potential over there is definitely reflected through other charts as well. So first of all, a daily chart reveals a very long structure of a corrective pattern. We've received an impulse movement dropping down. We've received a choppy A, B, and C structure climbing up. And since this downtrend movement, we were already going toward a downtrend continuance of an impulse movement, a liquidized movement of a downtrend potential. Right now, if we'll go to a low time frame analyzing this downtrend and uptrend movement, we can see that we've definitely went lower in a 5 wave. Let me count that with you. It's a 1, a 2, a 3, a 4, and a 5. And from this moment and on, we've received an A wave, a B wave, and a C wave, completing a corrective structure over here. My assumption is that the dollar versus Japanese yen, it will continue lower. Let me give you an assumption regarding the target. My initial target for the drop down will be toward the 99 area, but it may begin an impulse movement down, and therefore I may see the dollar versus Japanese yen collapsing down toward the 95 area. Okay, so the first target for this downtrend movement is approximately 98, but the larger target, which is a very logical target at the moment, is approximately 95. So we do expect to see a lot of downtrend over here. Again, something like 7%, which is 700 pips. It's a good downtrend potential over here on the dollar versus Japanese yen, again expressing the potential of a weaker dollar in the market. From here for Plus Financials, I'd like to wish you all the best with your trades. Have a pleasant day, and bye-bye.